The Sustainable Development Goals, or SDGs, were adopted by all United Nations member states in 2015 to end poverty, reduce inequality, and build more peaceful, prosperous societies by 2030. Many of the global challenges to development are especially salient for the children and youth. It is their future that depends on how well these SDGs are adopted. Where do our children or the youth stand today?
There are still a lot of kids
that can't go to school
because their families
can't afford their education.
Other kids have to walk a long distance
and even cross rivers and climb mountains just to go to school.
A lot of kids cannot go to school because the parents don't have money.
People are using up the world's resources
without thinking of the consequences,
like global warming. We have a lot of natural disasters
like super typhoons and forest fires
that destroy the livelihood and homes of many people.
People's waste are reaching the oceans,
killing turtles, fishes, and other marine life.
The number of animals are getting smaller and the food supply is getting smaller.
Why do you think their numbers are getting smaller?
Because they're getting endangered. The people have been cutting the trees in their habitat.
A lot of people are getting sick,
especially because of COVID-19. Everyone is affected.
Yung ibang people hindi makapunta sa hospital pag sick sila.
What is the ideal future for our children?
Sana lahat ng bata ay mabigyan ng pagkakataong makapag-aral.
I dream of a future where no kid gets left behind.
I hope people can start doing their part in saving the earth
by doing simple acts
like recycling or bringing our own water bottles
for our beverages.
Our family has learned not to use plastic bags, and I just hope others learn how to do that too.
Sana walang bagyo na makakasira
ng mga pinaghirapan
ng aming magulang.
I wish for a greener environment.
Less pollution.
I hope governments and people work together
so we can fight any virus
or any sickness
that comes our way.
I hope that everybody has an access to medicine and proper nutrition.
Sana may pagkain mga pamilya para wala nang maglimos.
All of the kids have to stay healthy. We dream of a future where every child thrives.
Every child lives in a clean environment.
And every child has a fair chance in life.
Now more than ever, we must work together
to make the world a better place,
to ensure healthy lives, improve access to education,
to combat climate crisis.
Aligned with the Atram's mission to engage, inspire, and collaborate
to build a financially secure future,
we are committed to building that future where no one is left behind.
We have adopted 3 out of the 17 SDGs,
aiming to make a positive impact,
as well as ingraining more responsible
and sustainable business practices within Atram.
At Atram, we value our children's dreams. Let's make it happen for them. Through the Atram Sustainable Development and Growth Fund, we'll invest in companies that embrace sustainability and believe that this is key to a better Philippines and a better future for us and our children.
If we be nice to our planet Earth will be nice to us.
Invest to thrive. Invest together.
Hello and good morning, everyone. Thank you for joining us this morning. I am Pat Muico, Business Development Officer and your host for today. Today's session is dedicated to the Atram Philippine Sustainable Development and Growth Fund, the first Philippine equity fund invested in publicly listed Philippine companies geared towards promoting awareness of the business's integration of the United Nations Sustainable Development Goals, more popularly known as the UN SDGs. The fund was just launched yesterday, February 17, 2021, It is a unit investment trust fund established under the authority of the Bangko Sentral ng Pilipinas. We are committed to doing our part in supporting the UN SDGs. How? Atram, as voted by the members of the organization, chose 3 of the 17 SDGs, namely health and wellness, education, and climate change, as our top 3 SDGs of main focus and interest. And to show our support for these goals even further, we have created a new fund that backs sustainable outcomes through the companies we invest in. I am sure that you are already excited to learn more about Atram's newest fund. But before we begin, I would like to let you know that this session will be recorded and that copies will be disseminated within the day as well as posted on all our social media pages. If you have any friends who you think would like to attend this webinar but are unable to attend, feel free to share the YouTube replay of this session. And to do that, you may visit our YouTube channel, Atram Studios. We would also like to invite you to join Atram's official Viber community group, #AtramPHCommunity, to stay updated on the latest announcements, advisories, and reminders. So go ahead and scan the QR code or visit the link on your screen. Please feel free to send your questions all throughout the webinar, as we will have a special surprise for all of you. Each question that you send is a raffle entry for a chance to win an Atram merchandise. Winners will be announced at the end of the webinar, so make sure to stay tuned until the very end. With that, let us begin. Our speaker this morning is no other than Atram Group's Chief Investment Officer, Mr. Phillip Hagedorn. Hi, Phil. Happy to have you back. You know what, Phil? I can't wait.
Hi, good morning.
I can't wait to find out more about this fund, Phil.
Yeah, we're super excited. I think it's trailblazing from our end. It's the first fund in the country that, we make our selection on the back of these UN Sustainable Development Goals. We hope that it makes a difference. We hope that it can create positive impact, and we hope all of you can become investors with us in this journey. But maybe, Pat, before we get going, we can do a poll, no? Just to get the sense of folks. And I'd like to introduce the head of our sustainability research and macro research, Jomar Lacson, to the group. Jomar helped us, very integral part of building the scoring process that we did for this fund. And maybe you guys can run this poll and let's get some information from all of our
audience. Yes.
Audience.
Why? Yes. Why don't we get to know our audience a little better this morning, Jomar? Okay. So maybe we can go through the first question. Okay, so the first question is, what do you think is the leading cause of death in the Philippines? Is it COVID-19 or pneumonia, vehicular accidents, hypertension, coronary heart disease, diabetes, or none of the above? Let's give our audience a few seconds to send in their answers.
Sure.
What are the answers?
Shall we now see the answers? Okay, so
accurate.
percent said coronary heart disease. What do you think, Drummer?
Yep, that's true. The main cause of death here is actually coronary heart disease. It's actually related to hypertension, which is like the second disease. It's all kind of related, meaning heart disease, hypertension, even diabetes. So the audience actually seems to be fairly well aware of these key health issues that faces all Filipinos.
The audience seems to have a good grasp on this. Shall we see the second question?
Yep.
Okay.
That's a good question.
Water for the citizens of Metro Manila in the next 5 or 10 years? Yes? No? Not sure? What do you guys think?
What are the results? Well, Jomar, I think the answer is yes. Now, first of all, the Philippines is in the area of the world that receives more rainfall than any other part of the world. I think our problem is catching this rainfall and storing the rainfall. So we have enough water, but Jomar, maybe it's about the storage and
Correct.
supply, no?
Yeah,
Rather
we
than
felt
the
some.
supply.
Yeah, we felt some of that shortage in 2019, and you know that we're currently sourcing our water from Angat Dam, and the government, along with the private sector like Manila Water, Manila, they're also tasked to sort of like find new sources of water. Most of it is going to be up in the mountains, but when you build those water, the catch basins also has an impact on the environment. So it has to be very well balanced when we try to address our water needs. So it's not just a supply but also demand perspective.
Thanks, Rob. Excellent. Right?
So yeah.
Maybe I can read this one, Pat.
Sure.
So will there be sufficient number of jobs for incoming workers 10 years from now? So you just imagine your children or your grandchildren graduating from college. Do you think that there's going to be enough jobs for them?
Okay, let's see the answers. Well, it's a close call.
Yeah,
actually, right now, I think the number of graduates far exceeds the number of
the
new jobs.
New jobs for youth. Yeah.
So
The data, Phil, is about 750,000 graduates back in 2019. Now, the growth in employment for youth is about 250,000. So, as Phil mentioned, it's later than that. So, it's either our labor markets are absorbing the graduates or they're actually being absorbed by other labor markets, meaning either in the region or somewhere else in the world.
Okay, a couple more questions here.
Okay, so do you believe Philippine companies invest enough in research and development? Yes, no, not sure, guys.
And the answers? Yeah, actually, that's very accurate. And I think the numbers are extremely small. I think the global average, Jomar, if I'm not mistaken, is around 2% of revenue.
Correct.
That's spent for R&D, and in the Philippines, we're spending less than 0.5%. Correct. If I'm not mistaken.
We're actually at the last place in terms of the ASEAN, in terms of R&D spending to GDP.
Okay. And the last question. Oh, sorry, there's two more, I guess.
Do you believe climate change and global warming? Yes, no, not sure.
This one will be interesting. Let's see the answers. Oh, wow.
That's a whopping yes.
Yep. And I guess it's our experience. So we were hit by 3 big typhoons last year. So the impact of climate change, because we all believe in it right now, the 99%, is the impact on agriculture production. And we're now paying with that with high inflation rates in terms of, particularly for food component. But it's not just assets or inflation. There's also the impact on lives or health and the wellness people, as like Typhoon Yolanda had taught us, right?
All right, and the last question.
Do you think you can solve the problems of hunger, poverty, pollution, and disease? Yes, no, not sure, guys. Maybe we can see the answers.
Well, that's a good sign. That I think that when you have more people saying yes, it means that we have the heart to make that change. Because at the end of the day, even if you're just one, you can make a difference even on an individual basis. And I guess that's what we're going to talk about right now, about
Yeah, let's get going.
possibilities.
Let's start sharing my screen. And well, we believe we can do it, right? We believe we can change, the way things are done and improve. I think, you know, humans always do that. We always find a way, and I think it always seems impossible until it's done. And as Nelson Mandela said, we believe it's possible. Um, I guess I want to start with a basic kind of introduction to socially responsible investing. What is it? And basically, socially responsible investing, or in short, SRI, is a strategy which seeks to consider both the financial return. So I think it's very important to understand that we are looking for positive returns here. We're not thinking of charity or any of that. We're thinking of finding a consideration for financial return and social and environmental good to bring about change regarded as positive by society. There's a lot of buzzwords out there. You have sustainable investing, responsible investing, impact investing, and there's many different variants. But today what we'll focus on really is sustainable investing. And what sustainable investing is, and I'll quote BlackRock here, who is the largest asset manager in the world, a partner of ours, and really how they look at it is sustainable investing is about investing in progress and recognizing that companies solving the world's biggest challenges can be best positioned to grow. And the world's biggest challenges have been summarized by the UN SDGs. This 17 Sustainable Development Goals have been developed to address the world's biggest challenges, and they include the Philippines' biggest challenges as well. It's about pioneering sustainable ways of doing business and creating the momentum to encourage more people to opt in. And that's what we want with this fund. By investing in this fund, you're opting in to sustainability and hopefully being a catalyst for change in the future. And this is not a fad. The assets under management, or the amount of money that has been going into ESG and sustainable funds, SRI-centric funds, have been growing very fast. Right now, globally, we have about $1 trillion invested in these strategies. But what's interesting is not that it's just $1 trillion, but since 2018, it's doubled effectively. Of course, a lot of this is in the developed world like Europe and the US. But certainly in Asia, it's starting to pick up. So if you had $992 billion globally, in Asia, as of the middle of last year, that number has grown to about $13 billion. But again, more than double from what it was in 2018. And China is a big leader in sustainable investing, actually. When you start looking in to the different things they're doing, there's quite a lot of development and progress in sustainability in China and across the Asian region. And we're seeing more investment flow into that. And like I said earlier, we're not giving up returns. The idea here is not to do charity. The idea here is not to give up returns because we're investing responsibly, but that investing responsibility generates the returns. And you can see that many of these funds, and particularly the Asian funds, have really had outperformance versus benchmarks. And many of these benchmarks have been very strong in terms of their performance over the last couple of years. So, I think it's showing that not only is there interest for this type of investment, but they actually give returns that are at, or if not in many cases, superior to market returns. So I think that's important to understand when getting into these strategies. So when we began the journey, we said, well, what do we need to think about? What do we want to consider when we start investigating and looking at companies. And first thing is, do we have any filters? Do we have any industries that we regard as we don't want to invest in? And at this moment, we don't. We included all industries at the moment because we wanted to score all industries. And the materiality of that would be to focus on the SDGs as our guiding principle. We will focus on these 17 SDGs and benchmark each company against them to see how the companies do. There is outside help we can get as well. There are few rating agencies globally that do this. There are some. Philippines, though, is very new, so the coverage is very low. And that's why we felt we needed to build our own scoring framework to reach the goals and conclusions that we wanted. And the data methodology, where we get the data, has to be available to the public. In reporting, sustainable reporting, many companies are required now, actually all, to have a sustainability report in their annual report. This is going to be the main source of a lot of the information we get from companies about what they're doing, because you have to tell people in an official way what you're up to. Chismis is not allowed. I mean, if you tell us you're doing something but you don't publish it and you don't have it reported, then we won't count it effectively. And that's how we gather the data for our analysis. And then we're able to find out the maturity of a company. There is no bad score, right? I want to point that out. There's no pass or fail here. It's just where you are in the journey. Are you unaware? Are you an infant? Are you beginning your journey, or are you in an advanced stage already? This is not a pass or fail. This is education and the ability to raise awareness and begin the journey. And that's what we want for all companies in the Philippines, particularly the listed companies, obviously. So how do we do this, right? Atram, many of you are familiar with our work. Many of you have attended these seminars. We like to do a lot of scoring. We score companies many ways. And this is what helps us understand businesses and industries. So we have what we call our fundamental score, where we look at 5 key factors that drive businesses, starting with their management, with their growth prospects, with their balance sheet and their credit risk. We're able to actually isolate credit risk by doing our own credit scoring for all the companies we look at. We also look at data outside of our own fundamental analysis, like quant, and looking at different factors that affect the market, momentum, liquidity. All of these things are monitored as well, that help us guide in our decision making. And more recently, we have an updated and integrated ESG scoring framework as well, which one day we'll talk to you about. But today we're going to be talking about our SDG scoring process. That's the process that we're using to manage and build this fund, construct this fund. And this process is really quantifying the views of a company's level of SDG integration. Ultimately, we look at the 17 UN Sustainable Goals, and we will analyze each company against each and every one of these goals. And that's why it's impossible to get a perfect score, because we don't expect everybody to be perfect in every area. But there are the higher scores and there are the lower scores. And I think the idea is to score these companies on 3 main pillars. The pillar of wellness, and the pillar of wellness includes the Sustainable Development Goals that are around an individual. It's about education. It's about health and well-being. It's about affordable and clean energy and clean water. This is the pillar of wellness of CAT. So these are 3 examples of SDGs that fall under the wellness category. Then there's a progress category. The progress category is around the communities that we live. Responsible consumption and production, climate action, sustainable cities and communities. We will score companies based on how they have an impact there. And finally, fairness. Fairness is an area where we're talking about peace and justice, poverty, gender equality. And so we're able to have a new lens of how to look at companies. Traditionally, investors like us, the primary lens we look at is fundamentals. You know, how much money is the company going to make? What's earnings growth going to look like? What are the prospects for capex, et cetera? We don't disregard that here. We will look at that, but that's not the primary focus. The primary focus is this area. And that's what we want to do. Now, as I said, we can look at it through a different lens. So this is kind of an example of the lens we're seeing in the end of the day. And I'm showing you one company here. It's our top scoring company. It's in the food manufacturing business. It has a market cap of less than $1 billion. So it's a small mid-cap company. It's not a large cap. And you can see from the triangles here, where the company does well, scores well, and where they need to do work. And, you know, the company's uses clean and renewable energy. They have a zero waste business model. They hire workers from around the community, which is a high scoring point for our scoring process. And so in the progress side, they've done quite well. The ideal lens here would be that the triangle, the blue triangle, is as big as possible. And that means they're really reaching the maximum potential. But you see they're a little bit underperforming in the fairness side because they need to develop better training programs for the workforce and wellness as well. So this is how we can kind of judge how a company is working. There are a couple of other lenses that we're looking at, but I'm trying to give you a quick example here of the results that we can see. You can see our scoring on the right side here. These are all the scores of the companies we've covered. I'm not putting the names of the companies, obviously. And you can see the difference between the scores. Some companies are well on their way of doing positive and maybe more advanced, while some companies at the bottom end of our scoring are completely unaware of where this journey needs to begin. You know? So the idea obviously is to start to push the companies below to have their scores improving as we move along. And there's really interesting stuff that we find out. So when we look at SDG integration at work, for example, did you know that Jollibee Foods manufacturing plants use energy from renewable sources is double that from non-renewable sources and continuing to grow? I think that's quite important. Did you know that Union Bank of the Philippines has an in-house e-learning portal called Union Bank University? That's there for them and their partners to educate on data science, blockchain, and other digital skills. That's only going to make Union Bank a better bank in the future. We already have seen the growth in Union Bank this year and the number of new customers because of them being ahead in the digital game. You know? Did you know that a small company like Axelum Resources utilizes their whole coconut? They're a manufacturer of coconut water and other cocoa products, and they don't leave any waste. It's a zero waste game. And it's the same for Century Pacific Foods with tuna. Every single bit of the tuna is used. And that's a very positive approach that we would consider in our scoring. Here's a really important one for me, and I think it's around gender equality, where the biggest banks in the country, the top three, BPI, BDO, Metro Bank, women account for more than 50% of the senior management positions, which is really incredible for that industry. I don't think you've seen that in any other industry in the country today. So these are examples of information we learn when we start digging into some of these businesses, and we think that these practices adds value and makes it really interesting and makes it very sustainable for the long run. So what we thought is, hey, why don't we do this scoring process? We're going to find out great stuff about these companies. Let's put it in a fund. Let's put it in a fund that will be committed to this. We'll be committed to this process. Of course, we will make sure these companies are financially stable and healthy and don't have credit issues. But the main driving force will be the sustainability angle, with as far as what we want to be investing in. We want to make a difference. We want to make positive impact. And that's what makes us very excited about this fund. The objectives, first of all, we want to have broad impact. So we want people to look at this, believe in the process, and say, well, we want to adapt. We want to move in that direction. We have to focus on the long term. This is not a trading account. This is not, I think that this is a strategy that you have to think and let it play out. We have run back tests on this strategy. The results are very promising, but it is a long-term strategy. And it does promise above market returns, so we're excited about that as well. Some of the features, it's research driven. So we have created our scoring process. I'm not going to do a deep dive into that process today. Excuse me. But we are, we've been building this for close to a year now. And the outcomes are based on our research and the data that we've received from the companies themselves. We've balanced it out. So although we are selecting companies on the back of their SDG integration, we are looking at return on equity and price to book and other factors. We're looking at our other scores to guide us a little bit as well. And we're looking for best practice. Jeez, excuse me. Gosh, talking too much. So we're looking for best practices following the best fiduciary duties, etc., that are required. No? The consideration here is we've chosen the index as a benchmark, the PSEI, basically because we feel that we want to see how it does versus the PSEI. It will show you some features of the fund versus the PSEI in the next few slides. No? This is a little bit of an aggressive strategy. We don't have any conglomerates in the portfolio. We felt that holding companies, we want to invest in the operating companies that have that impact. So it has slightly higher tracking errors than our other funds. But again, it's also shown very good promise in terms of the returns moving forward. No? And the thesis is basically that companies that follow these initiatives really will deliver above average returns and at least not correlated with the negative returns that markets are seeing. So the thesis is sustainable investing generates above market returns overall. What does a portfolio look like? So here's the top 10. It's a 20 stock portfolio, but I'm showing you the top 10 right now. And that's on the left. And I'm putting it side by side with the top 10 of the Philippine Stock Exchange Index. You'll see that, we have large caps there. Ayala Land, BDO, BPI, Jollibee, FGen are large caps. But we also have a significant amount of mid and small cap companies in the top 10 of the portfolio. When you look at the weights of each sector, consumer sector is the largest weight in this SDG portfolio, followed by the banks, the power, and the property sector, with still exposure in construction, utilities, energy, and telcos. If you put it side by side with the index, you'll see very clearly we have a significant underweight. Almost 40% of the PSEI index is conglomerates. I'm not sure if the crowd here is aware of how an index is created, no? But the Philippine Stock Exchange Index is basically the 30 largest companies. It's effectively investing in the 30 largest companies in the country with the largest float. Not a bad way to invest, but to be clear, you're investing in effectively just the largest companies, irregardless of what their earnings are, etc. And in the PSEI, 40% of that index is the holding companies. They're the largest in the country. We don't invest in that, so we replace that exposure with exposure in smaller companies in the banking, property, services, and industrial sector. And you'll see we're overweight in banks, slight underweight in property, and I don't think that's a bad thing to do right now, considering the situation we're in. But we're overweight in services and industrials, which are around the consumer space and power space. So overall, I'm quite excited about the makeup of the portfolio versus the index. We also have 52% of the stocks, of the weight in the index and non-index stocks, in the fund, sorry, in non-index stocks. Well, that's about evenly balanced between large cap and small cap in our portfolio. Just to kind of understand a little bit of the risk of the fund and the strategy, you'll see again the weights, and you'll see where our overweights and underweights are. That's what we talked about earlier. And the tracking error. So the contribution of tracking error is the deviation that we expect to have versus the index, or might have versus the index. A big half of the tracking error will come from that underweight in conglomerate. So we feel that the overweight in those more sustainable, responsible companies that are adhering to our scoring and score high will outperform those holdcos over the long run. So that's the thesis, and like I said, the back test has shown that. We look forward to this fund doing the same. So just to summarize this all, and we can get into a bit of a Q&A in a second. We've developed a strategy and a fund actually today that makes sustainable investing accessible to all Filipinos. So you want to get on the journey, the fund will be available in all of our platforms, and we look forward to hopefully you joining us. It is a frontier strategy. It is a new strategy. It's a unique strategy. I really implore that you have a longer term horizon for it. It could have some high volatility and high returns, but the idea is to let this strategy play out and think of it over the long run. And overall, we'd like to continue to push capital to this path, to this sustainable path, by directing capital to companies that integrate these practices into their business strategies. So with that, I'll kind of go into the Q&A and I'll pass it back to Pat. Pat, if you want to take it on from here, I'll stop sharing and we can get into the Q&A.
Yes, I see a lot of questions coming from our audience. Okay, we can go through them now. For the first question that I see here is that, how are Philippine companies in terms of sustainability integration? Are they comparable to the rest of the region?
I think the answer is we're in very early stages of it. There's a few companies that I think are ahead of the curve, but I think I can count them with one hand. But I think that there's awareness. So most of the companies that we've covered are aware and are planning on doing things. but very few have actually um, done anything material. And I don't know, Jomar, please feel free to add any color to that if you wish. No?
Yeah, Phil. So I think we showed in one of the slides example of the sustainability score for the top one. There's a chart there that shows now the score across the universe that we had looked at, and it really shows the maturity. Many bulk of the companies in the PSCI still have a long way to go. But actually, when we look at it across the global spectrum, we're actually like if they're like four levels, some of our top companies are actually trying to get to the fourth and third only. So that's still a long way to go for the Philippines. But we're moving. I think that's the important part. There's some
Thanks.
push.
Okay, so why did the UITF focus on the equity fund investment?
So why are we doing equity only right now? Well, I think that's a great question actually, and one day we look to possibly do credit as well. No, but credit markets are still, bond markets are still a little bit illiquid. It's a little bit of a challenge in that side. No? So something we want to do, but I don't think we're prepared yet as far as the development of that market. No? The liquidity required to really launch. We have a corporate bond fund that it's an HTM type of situation. So I think that's a challenge, but something we want to do in the future.
Okay, so Phil, I have a question here on due diligence. I believe you went through the scoring earlier. What kind of due diligence did Atram do to make sure that listed companies within the fund support the UN SDG goals? Can you walk us through that further?
I'll pass that to Jomar. I think Jomar was deeply involved in that process. So maybe you can give us a sneak peek, Jomar, see what you were doing. You're on mute. The famous last words of Zoom.
Yeah, so we did choose 12 of the 17. Basically, why is it only 12 and not the whole 17? The answer to that is really that some of them um, uh, kind of like, I won't say redundant, but um, are also the same. So what we decided to do was fold this in. For example, like life on water and life on land. So we folded that already to one on climate uh, on climate change. So that's the reason why we kind of were able to compress that to the 12, which we felt reflected the whole 17 already, and allows us to measure the or at least evaluate the companies via SDGs. Now, the key there is really the metrics. We had to choose metrics per SDG that we have to benchmark each company. Now, the difficulty, and this is true across the sustainability investing spectrum, is comparability. So we try to address that by standardizing the outcomes or the KPIs by which SDGs are being measured. The important part is that for you to be able to integrate SDGs into your business, is you need to measure it. Meaning you need to measure carbon emissions. If you don't measure carbon emissions, you can't have a policy to reduce it. You can't have a strategy to reduce it. So these are the things that we are looking at on a per company basis. Do they have policies? Are they measuring? That's the first thing we have to ask. Are you measuring like training hours? So there's a specific. So then we can look across industries, look across companies, and see how what their strategy is with respect to integration of sustainability. So that's how we approach it.
And Jomar, maybe, I mean, where the data that you get, can you share where you're able to source the data from?
Yeah. So one of the reasons why we're still in our infancy is that the sustainability reporting was just mandated, I think, in 2019. So people, although there are some companies have been ahead, like 2012, some companies have already started doing their sustainability reporting. Uh, Many have just begun in 2019, and I think the rule the SEC is allowing is 3 years to fully integrate or do your sustainability reporting. So that's where the basis is. So that forces companies to measure these outcomes or these KPIs. So if you're doing that already, then that's already +1 for you.
Thanks, Romer.
Thank you, Drummer. I am curious, why not?
There's so many questions, so we better
Yes, we do have. Yeah.
our answers so we can get more.
There's a lot coming in. Okay, so I am curious, Drummer, why not factor in all the 17 SDGs? Why did you consider? Will you consider future SDG goals as a factor for company selection to be included in the fund?
So as I mentioned, this is when we looked at this, you had to study first the SDGs, and some of them do replicate. For example, I mentioned that life on land and life on water; those are actually just looking at the biosphere, right? How does the company look at the biosphere as a whole?
So I think in the end, we actually do look at all 17, but some of the questions that we've developed are answering for two. Is kind of the way we want to answer that.
Precisely.
Okay. I have a question here is, how often will you update the composition of this fund?
Great question. And we will update the scoring every year annually, but rebalancing the weights of the companies inside the fund will happen on a quarterly basis, depending on how market movement, etc. Of course, if there's a company that falls out of favor quickly, it can be taken out at any time. But we don't expect that we're going to have a lot of turnover in this fund. In other words, buy this company, sell this, buy this. No. This first 20 stocks that we're going to own, I don't see any reason why we're not going to own them for the minimum of 1 year. And then we will rebalance come next year.
Okay.
If I could just add on that, the purpose of the fund also is to motivate the companies to integrate, right? So your score is dependent on your performance. So your score today will be different. If if you are actually able to improve, that actually creates a more reason for the weightings to change in your favor. So if you are deteriorating, I mean you're integrating less, then that would also be affected. That will also affect your weighting in the fund.
Thanks, Roman.
Now that we're in the composition of the fund, would you consider investing in a company's CSR program?
Well, effectively, that's been the Filipino company way of doing socially responsible things, is CSR. And in our scoring framework, and Jomar, you can add more to this, CSR does not carry a very heavy weight. Jomar, you might want to expound on that.
Yep. So the way you're gonna have to make a big impact, right? I mean, one of the questions that we've been addressing is greenwashing. So basically, can a company just spend through donations or through the CSR to make their create an impression that they're actually doing SDGs? Well, it's possible, but for this fund, our strategy, what we need is a bigger impact, and that bigger impact will come from integrating SDGs into the business, creating policies for it. So we've created a smaller weight. The bigger weight will come from integration, not CSR. So you can spend as much; it will have that will improve, but at the end of the day, the better investment is to integrate. That will have a bigger impact.
In terms of the companies that we are investing in, is it possible to have two energy companies in the fund?
As a matter of fact, I'm not mistaken, we have
AC Energy is
AC Energy and First
F,
Gen, F-Gen in the fund today.
it's and I just want to add to that. It's not, remember, this is not just about the environment. I mean, these are 17 SDGs being expressed. So when you score well, it's not just because you're into renewable energy. That's a big component, but you also are doing well for your wellness and your fairness SDGs.
Okay. So there's a question to Jomar. Do you find the IRIS metrics useful as a starting point for companies to assess their SDG readiness?
We haven't looked into that as far as our metrics are concerned. We are moving forward with our framework. There are many frameworks that are out there, and these standards are available. But most of it is based on materiality, and what our objective when we started is broadness. Okay, because we wanted to make sure that the SDGs are implemented on a broad basis. If we're just to go focus, then the comparability will become more difficult for us. So, though that's basically the objective. It's not about materiality. It's more about a broad integration of SDGs.
Okay, I guess we can take a few more questions. If SDGs are to be achieved by 2030, what would happen after?
I'll give you
better cities, better communities, better environment.
I have to give you though that the reality is the report of the SDGs is that we're actually behind. For the 2020 SDGs, we're behind. So that's the reason why I think it's more imperative that the private sector comes in and helps out.
Okay, we have a question here that's very interesting. So why are the companies not selected to their overall impact to all the SDGs rather than per specific SDG only?
No, they are. I mean, each SDG is scored, and the total score takes into account their performance versus each and every one of those. So they are judged. We're not cherry picking to say, for example, you have a power company that's a clean energy, will only score you on clean energy. No, we're scoring them on every single one. And in that way, I think we're able to see a big picture of the company and how they address all the issues, not just what might be obvious from our point of view for that company. Jomar, if you want to add something to that.
Yeah. So basically, sometimes one of the questions we had is if you're good in one SDG, can you be bad in others, right? And you're still a good company. Does that make you a good company? So here, it's not about, as Phil mentioned, it's not about good or bad. It's really where you are. So we review you across the 17 SDGs, and what we want to see is that you don't just go beyond the SDGs that are relevant to you, but make SDGs relevant across the business.
Okay, so I think we can go to our last few questions. So is it good, in terms of investing, is it good to invest this fund in lump sum or through peso cost averaging? And then how long should I invest in the fund?
Well, I think it's always good to do peso cost averaging in any investment. So I would do that. And it's an equity fund, so you have to think long term, for this one. I'm excited about it because I think it can perform well early on, but that doesn't mean you trade it. No? I think the way we see it, we think that this could be a core part of your strategy. And maybe today it's only 10, 15%, but maybe at some point, if it's proving itself, it becomes a core part of your portfolio. No? And I think, if we can show that there's correlation between support for SDGs and performance, then I think we'll all be in a good place as this fund continues to grow.
Okay, I can't I need to take this question. What is the SDG score of Atram? If we rated ourselves.
Jamar, I think we did it, right?
Yes, we did. We did rate ourselves, and we saw where we need to improve. So we are now doing our own measurement of the metrics that we look at other companies. We're also doing the same thing. So yeah, we'll have to find our own, internal sustainability report to do that. Where we are,
we adopted. Our journey has just really begun. We adopted the 3 SDGs last year. We are, obviously during the pandemic, it was a difficult period. But we are launching what we call Atram Academy this month, actually. These are ways that we're trying to improve our score.
Yeah, so we do have SDGs of education, health. These are where our score is actually very positive on the R&D side, our health, wellness, and education. But remember, the objective here is to broadly apply SDGs. So that's where we're starting really on these 3. But we don't stop there. We have to start next phase 3 to measure our energy consumption, water consumption. These are things that we have already.
Good
question. Yeah.
Yes, unfortunately, that's all the time we have for questions. Thank you, Jomar and Philip, for taking the questions. Any last words, guys, Philip and Jomar?
Well, just again, thanks for having us again here. We're excited about this launch. We launched yesterday. The fund is now available in Seed Box. I think there's be some details given in a few minutes, but we'll try to get to your questions as well. Just keep on sending them in, and we'll hopefully be able to answer all of them at some point. So thanks again, Pat. Thanks for having us, and let's get on this journey together. Let's do this.
Okay, once again, thank you, Philip, and thank you, Jomar, and of course to our audience. We appreciate you taking time to join us today. And I am sure that you guys are interested to know more about how to invest in the Atram Philippine Sustainable Development and Growth Fund. May we call on Paulo Edelior to tell us more.
Good morning, everyone. To open an account with Atram, just visit our website at www.atram.com.ph. Here you can learn more about all the funds that we offer, especially our newly launched fund, the Atram Philippine Sustainable Development and Growth Fund. It will then guide you to our online investment platform, Seedbox, where you can start investing in the Atram Philippine SDG Fund for just 1,000 pesos. But if you have more questions, visit the website's frequently asked questions page or the Atram Academy page as well. Thank you.
Thank you, Pao. And as promised, here are the winners of our Atram merchandise. The winners are, if you have any further questions or would like to learn more about Atram, please visit our website, www.atram.com.ph. Once again, if you have any friends who you think would like this webinar but are unable to attend, feel free to share the YouTube replay of this session. Visit our YouTube channel, Atram Studios. Lastly, please answer the survey at the end of this webinar. We would love to know your thoughts on this topic on behalf of Atram. Thank you again for your attendance and participation. We wish for the continued safety of you and your family. Have a great day.